Okay, we are live. So we are live. Welcome everybody. Welcome this morning. We have a special guest. His name is John Gomes. And I will tell you a little bit of a story today before we start. Um, uh, how came across John. So I was sitting in Scarborough in front of a listing, and I was waiting for my customer. And then I saw a car come by, and John comes out, and then he knocks on my window, and he says, "Oh, I can help you. I can help you. Here's my card." Right, and that's how we got started. And I really liked his approach. And then we got to talk about and discuss a few things, and that's how we became good friends. So welcome everybody to our channel, and welcome John. Thank you for joining me. And John, so tell us about your journey to Canada and your journey into becoming a mortgage agent.
Above all, thank you so much, Rez, and of course to all my viewers, to all our viewers, particularly, and of course, really appreciate Rez introducing me. And it was a fantastic introduction, as Rez was saying, a knock in his car window, and here we are talking to each other live, and that's fantastic, awesome. Thank you so much. So, a little bit about my coming up into this mortgage or broker channel, right? Of course, coming to in Canada, like I came to Canada in 2004, and of course, as everybody comes, we're totally new to Canada, and we have to start from scratch. Same thing I did. I started from scratch. Hunted my way out, found the earliest job I could within 15 days. Started my career up there, doing whatever job I could get in hand. But I always had in mind about my calculations, because I was always into calculations ever since I did my studies, my career, by studying back at home in BCom. So we used to do our calculations back in accountancy. We were not allowed to use calculators at that time.
Right.
So that thing was always there, right? And yes, and finally, you know what? I got my breakthrough in one of the major banks. I've been with the bank for the last 13 years. I started as a teller. And again, calculations was always there in my mind. And of course, coming to know about mortgages was something really, really new to me when I first came here. Because back at home, we never heard about mortgages in those days.
Yeah,
right?
It was all cash, right?
Yes. Back
Your
at
dad
home, it's
or
something
your
different.
grandfather had left you all of the cash, and you
Right,
bought the
right.
house, or they had left you the house, right?
Yes. Even my father bought his house. Never even thought about a mortgage. Like he bought his house with his own cash money, right?
Yeah.
And that's how it went. Of course, these days things are changing back home.
Yeah, that's changing. So actually, let's educate the viewers about how in real estate in Canada you don't need all your money. Like, in the sense, when you go to buy a car, maybe you're buying your car outright. You're paying 25K, 30K, whatever it is, right? But in real estate, we have leverage. We only need what for first time home buyers 5%.
Absolutely.
10%, and for investors only 20%, right? So let's
Absolutely.
talk about that leverage a little bit, John.
Absolutely, you're absolutely right. And just and highlighting this point, I would say, being in Canada, being in this beautiful country, we are really, really privileged. And the fact that you've just told us, right, back at home when I was there, like my father bought his home probably after working probably 20 years
Yeah.
of his working career that he had, and he was renting all the time.
Yeah.
And then finally, after 20 years, he bought his house.
Yeah.
But here in Canada, we are so lucky. Like as you mentioned, with as minimum as 5% of the value, we could enter ownership, home ownership. And how fabulous is that, right? And I would say
Yeah.
we are blessed. So
Yeah.
I think we should take an advantage of that, look into our options, and actually jump into home ownership. As I said, we don't have to wait for 20, 25 years to
Yeah.
get the cash in our bags, carry it to the bank, and buy a home, right?
Yeah.
But I think that's fabulous. And of course, yes, absolutely. You know what? As I mentioned, right, as you mentioned, we take advantage with minimum 5%. We can enter into home ownership,
Mhm.
and even the government having incentive programs
Mhm.
wherein you can borrow from the government. Of course, there are details that one wants to know often, definitely,
Mhm.
but even the government is helping in home ownership for people to come up with that 5% down payment. How beautiful is that?
Excellent, excellent. So, you know what? Let's get into the topic today, right? Rates, what's in it for you, right? So, everybody is curious, what are the rates and how they are impacting their mortgage. So, educate us a little bit about what are rates, what are the different types of rates, etc.
Absolutely. And again, once more to the viewers are there, and I think everybody is focused on this to find out rates. And absolutely, you know what? In today's, I'm in a brokerage right now, and whoever I talk to, the first question they ask is, what rate can I get? What is your best rate?
Hmm.
And I think that is one focus that everybody has in their mind when they talk about mortgages. And I think that's the hottest thing in the mortgages, rates. And I think you will see everywhere around, right? We will see rates, and that's all we hear, right? And of course, like it's good to talk about it.
Yeah.
And as we have the topic, rates, what's in it for you? Now let's talk a little bit about rates, right? Basically, what we hear from around and what people understand, like we hear two types of rates. One is the fixed rate, and the other is the variable rate. Now, again, these are the two types of rates that we mostly hear. Of course, there are other types too, but let's stick to this because this is what
Yeah.
our viewers
Yeah.
or people that are into home ownership or that are looking forward to when they hear rates, they have these two in mind. So, fixed rates. Now, fixed rates are rates that are fixed in a sense that there could be a fixed rate for 1 or 2, 3, 5 years, 7 years, or even 10 years, right?
So
So
that's
these
the
are
term,
some
right? So it's
exactly.
time. Yeah.
So it's the term of that particular loan or mortgage that you take,
Yeah.
and it's capped. That rate is capped. And of course, we get special offers. We see, like, well, somebody might say, oh, 1.45, 1.99, 1.25. So these are all fixed rates that we take during that term we choose, right? So
Mhm.
that's a fixed rate.
Yeah.
Now, on the other side, we have a variable rate. Now, again, variable rate, we must understand that variable rate depends mostly on prime,
Mhm.
right? So when we have a variable rate, it depends on prime. The banks have, the lenders have a prime rate that is stipulated. Most of the time, most lenders stick to a standard prime rate, but it could be different depending on the lenders.
Mhm.
So variable rate would depend on what we call prime and the discretionary pricing we get on that prime.
Mhm.
Sometimes it could be prime minus,
Yeah.
sometimes it could be prime plus.
Yeah.
So depending on that now, so it depends on prime. So somebody could have prime minus 1, prime minus zero point 0.9, prime minus zero point 0.6.
Mhm.
Somebody could have even prime plus zero point 0.5. It depends on the situation, right?
Mhm.
So these are the basic two things that we have as far as rates are concerned. So fixed and variable.
Mhm.
Now, so when variable is concerned, as I mentioned, it's on prime. The Now within the variable, again, we have two types basically. One is the variable open, and one we see is the variable closed. Now, variable open means that the term is open. That means the client has the flexibility of paying down the mortgage anytime they want,
Mhm. There's
right?
no penalties. Yeah.
No penalty. So they get a lump sum amount. Say they win a lottery tomorrow,
Mhm.
and they go to the bank and say, "Hey, I have my $500,000 mortgage,
Yeah.
and I want to pay it off."
Mhm.
Absolutely. Or they get, a lump sum amount from their relatives, or even from the estate,
Mhm.
and they could pay off the mortgage right away.
Yeah.
No penalties. Now, variable closed, on the other hand, the rates that is there, it's variable, but the term is closed. It means that, say, the variable rates could be a term of 3 years or it could be a term of 5 years.
Mhm.
Now, when it's 3 years, that means the term is 3 years. Within that 3 year term, the person or the client would get that particular discretionary pricing that is stipulated for.
Mhm.
It means that if it's prime minus 1, that prime minus 1 stays intact within that term. Say if the prime right now is 2.45,
Mhm.
if it's minus 1, the client would have got 1.45.
Mm-hmm.
So if the prime stays the same within that term, the 3 or the 5 years,
Mm-hmm.
then the client would still have that 1.45 within that term.
Yeah, perfect.
Again,
So
yes,
just for the viewers, right? Let's talk what is prime. 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 Just a little bit of a background on what it actually is prime, so that they understand what is prime rate.
absolutely. So prime is stipulated by the Bank of Canada. So there's a Bank of Canada prime rate, right? That is what the lenders follow
Mm-hmm.
as to what they would stipulate based on that prime rate. So
Perfect.
that is what the Bank of Canada stipulates, that prime rate, as we know. And so that prime rate depends on various economies, right?
Yeah.
Various economy structures that they have, the present market situations.
Mm-hmm.
As we know, we would attest to this, ever since 2007, 2008, we have been struggling with the prime, right?
Mm-hmm.
At that time, it went down, very very down, and then it started climbing up. It goes up and down, right,
Mm-hmm. Mm-hmm.
depending on what the market situation is, right, what the
Right.
economy is, the
And Bank of
financial.
Canada, when Bank of Canada, controls it and determines it, right? And so basically, when Bank of Canada determines this, the banks have to, this is what the rate that the banks get, right?
Right. So a little bit clarification on that. The
Yeah.
Bank of Canada stipulates a rate where they would borrow, like where they would lend, I would say, where they would lend that money to these lenders, like to the
Got it.
banks.
Mm-hmm.
Now, again, when the banks takes this money from the Bank of Canada, right, then they would stipulate as to what they would keep as prime, because
Mm-hmm.
Bank of Canada's prime and the lender's prime are two different things.
Okay. Okay.
It's not the same.
Mm-hmm. Mm-hmm.
So again, it depends on, they depend, because if Bank of Canada raises their cost of borrowing, like their borrowing when they lend,
Mm-hmm.
these lenders or the banks would also raise.
Mm-hmm.
So that's the equation they follow.
Yeah. Yeah.
So basically, see, if the Bank of Canada captures at 0.25, now the lenders have captured it at 2.45. So that's
Mm-hmm.
the difference. But at the end of the day, it depends on the prime rate. That's what we call it, right? So
Got it.
prime is set by the banks, and that prime minus whatever discretionary pricing, that rate would be dependent on the client that they would get for the variable rate,
Got it. Got it.
right?
So let's talk about penalties, right? So most people you know uh, come to know of penalties after the fact, right? They sell their home and then they say, "Oh, he mentioned that I'm going to get X amount of money, but I didn't." Right? What happened? Right? So there was a penalty, right?
Right, right.
So it's important for clients to know that if you are breaking a mortgage, right, you are going to be charged a penalty. So let's talk about penalties and how does it impact with the fixed rates, with the open and closed terms, etc.
And absolutely, thank you so much for highlighting this point. And I think it's very, very important. See, when clients or people are taking the mortgage, probably 99% of people are not even thinking about this part.
Yeah,
And it's a fact. We come to know this later on when they come to us.
yeah,
But I think that's a very, very important part we should consider while we are taking a mortgage. We should understand that. So keeping penalties in mind, of course, again, keeping those two rate factors, fixed and a variable, in a fixed rate, the penalty would depend what we call it interest rate differential. Interest rate differential is, again, how does it work, right? So when we take a mortgage, say in today's market rate, the bank has a special offer. Just give you an example, say 2%.
mm-hmm.
Now, normally the lenders would have what is called a posted rate, right? That posted rate could be, 4.39 or 5.29, whatever it is, right? The
Mm-hmm.
posted rates could vary also from lenders to lenders, right?
Yeah,
And what happens is that the posted rate minus that discretionary pricing that special offer that you're getting,
mm-hmm.
it means that, say, if the posted rate is 4%
Mm-hmm.
and the special offer is 2%,
Mm-hmm.
so the difference is now 2%, right?
Yeah, mm-hmm.
So that 2%, now if somebody is breaking a term,
Mhm.
then say if the client takes a 5-year fixed rate
Mhm.
and they are plan to sell the house or do or pay off their mortgage within 2 years.
Mhm.
Now we have a 3 years remaining,
Yep.
right? So that 3 years would be calculated. The term remaining
Mhm.
would be calculated with this pricing, discretionary pricing,
Mhm.
and that would be the penalty that a person or that mortgage would have for
Right.
breaking its term.
Yeah.
And with fixed rates, it's not surprising. Somebody could end up a penalty of $20,000, $25,000, depending.
Right.
I've seen that. So, and I think it's important for us to know what the penalty would be. And I think it's a great, great topic. Like the penalty by itself, there's lots into it. And of course, on the other side, if somebody has a variable, of course, variable open, there's no penalty, as we mentioned, right?
Mhm.
Because you can pay it off anytime,
Yep.
and that's the characteristic of a variable open rate, and
Mhm.
that's why the variable open rates are high. I think the highest probably you could think of in a
Mhm.
rate factor.
Mhm.
The variable closed term, no matter what it is, most of the time, whenever a person is paying off a mortgage, normally the penalty would be to discharge the mortgage would be 3 months interest penalty.
Mhm.
Normally,
Mhm.
again, this is something that one person would take into account while signing the commitment papers for that particular mortgage they take.
Mhm.
So this is highly, highly recommendable. I recommend everybody, whenever we take a mortgage, please, please, please look into the discharge factor, which we call penalty, as
Mhm.
to what would be the penalty for that person breaking the term. And I think that's very, very important.
Yeah. Excellent. So, you know what? Just to highlight to the viewers, if you guys want John to calculate your penalty, right? He is offering that service, right? So, before you sell your home, reach out to John, and he can calculate the penalty for you, and look through the contract and tell you what it is going to be, right? So, it's important to know, how much it's going to cost you, right? So, it might not be ideal time for you to sell if you have to pay $25,000 in penalty. Okay, so
Absolutely.
watch out for that. And John, um, how about we discuss? Like everybody is shopping for the rate, but they don't understand that the rate is actually dependent on them, right?
Absolutely. I think
Right.
this is also a
So
very, very important part.
so
Yeah,
yeah, so it depends on whether recently you bought a car, your income, your debt ratio, right? So let's highlight these things, that how the interest rate or is actually dependent on you, right?
absolutely. Absolutely. And I think this is a very, very important part. And thanks for highlighting this particular part. It's for a little bit of clarification for our viewers. Normally when we talk about rates, right? As for us, because we see the big posted rates that we see, like sorry, the special offers that we see, right?
Hmm.
And of course, like somebody is posting up, say 1.25% or 2%.
Yeah.
Now the question is that rate for me or for that particular client? Because rate factors, see, when they have a special offer, we must also think like how many people are going to qualify for that special offer.
Right.
So
Yeah.
that's what's important, right? When people come to us, we have that very common question saying, "Oh, you know what? I'm getting they are poor. They have a special offer for 2%, or
Yeah.
they have a special offer for 1.2%.
Hmm.
And can you give that to me?" And I said, "Absolutely. Let's talk about it." Right.
Hmm.
So this is what we will discuss right now to factor into the various factors that that rate depends on. The first important factor is the credit rating for a person.
Hmm.
As we know in Canada, we have credit rating, credit bureau rating. And I think it's very, very important for us, for everybody, for every one of us. I will specify this for every one of us to maintain, to take that extra step to maintain that excellent or good credit rating. It's
Hmm.
very, very important. It's
Hmm.
I would say, one of the factors, one of the major factors that would drive a person to get that excellent rate.
Hmm.
The next thing comes out also is the down payment, the
Yeah.
amount of down payment a person would put for that particular deal. We call it in our mortgage language. We call it the jargon that we use is loan to value. So when a person, depending on how much down payment is putting, the loan to value, it could be 50%, it could be 5%, it could be 20%, it could be 65%. So depending on that loan to value,
Mhm.
that is also a factor that denotes the rate that person will be getting. Now, again, we have another thing called ratios.
Mhm.
Again, when we say ratios, again, to our viewers, we'll be using a little bit of the mortgage industry jargons. We call it ratios. Now, ratios could be a lot of things that we think about, but in this perspective, ratios would be, we call it debt service ratios.
Mhm.
In our mortgage jargons, we call GDS and TDS. So gross debt service ratio and total debt service ratio. So depending on the ratio, so when we calculate or when we structure the deal, we come to a conclusion of these ratios for a particular situation. And every deal is different. We as mortgage agents or at mortgage doctors, we say,
Mhm.
we construct the deal and we figure out what is the ratio for that particular client or for that particular deal. And
Right.
this is a very, very important factor also in terms of getting that excellent rate or what rate the client would qualify for. Another important part is what we call, again, I'm using a mortgage jargons,
Mhm.
called amortization.
Yeah.
Now, what is amortization? Amortization is your length of that loan that you take or the mortgage that you take for the number of years that would amortized. It's called years that it would go for.
Mhm.
Every year it could be 25 years, it could be 30 years.
Right.
Again, when we are structuring the deal, we see the amortization that the client would fit into. The first thing we keep into mind, again, before we talk about rates, is when we are structuring the deal, the first thing, even before we can go to the rate part, when we structure deals, the first thing that we look for is the approval. What is the client going to approve for? Like, how is the client going to get approval? And
Yeah.
there's a lot of ways we play around or we structure the deal, we call it, in
Mhm.
terms of the approval. So again, amortization is one of that in terms of structuring as well as finding out the rate. So, and I think these are about the factors that depend what best rates we can get for the client. So sometimes, when client comes to us saying, hey, I want this rate, and sometimes, they might feel a little bit offended or they might feel a little bit dissatisfied, saying, oh, you know what, this person is quoted me this rate, but
Yeah.
you can't give it to me. So it is for our viewers to understand that, again, it depends on how that person would structure the deal,
Mhm.
and that depends on that person who you're dealing with, to structure the deal in the best possible way
Yeah.
for them to get the best deal, right? So, and I think, what, it's a little bit of clarification for our viewers. Sometimes, when we come, it's not only about the rates.
Mhm.
That's what I say.
Mhm.
There's a lot of other factors. Of course, we are going to give you the best rates, and that's our goal,
Yeah.
right? But we have to look into the possibilities. It's not me. It's not the professional. It's not the person who's actually doing the deal. Again, as you mentioned, it's the person himself,
Yeah.
right? The person, the
Exactly.
client himself, who could qualify for that rate, right?
Yeah. Thank you. Thank you, John. So, John actually has excellent gift for us. So, John, can you tell us about that amazing app of yours? I love that app. Can you? I will actually share the link. On once we are done with this. You can tell us a little bit about your app. What can we do with the app, and how can the viewers download the app?
Well, absolutely. You know what? I have an app up here. It says John's app, and I have it in my phone. And people could also download that app, and it looks.
So, if they
Uh,
search on Google, if they say John's app, will it show up?
no, it would no, it wouldn't show if they would say John's app.
Uh huh.
There is a link. which I would have to share with them, or
Okay.
which you could share with them. I can share it with you, and
Okay.
that link could be captured by anybody.
Okay.
So it is an app
Mm-hmm.
like this
Yeah.
up here, which is John's app, and you would
Perfect.
see up here in this app up here, there are so many calculations. So all these things that I'm talking about, right?
Mhm.
If somebody can reach out to you
Yeah.
or reach out to me, I would be most happy to share this app. It talks so much of features. It has so much of features in this
Mm-hmm.
that even a normal person would not have to worry about calculations. And this is the fantastic thing about today's technology.
Yeah.
One by just clicking there, certain figures that you would know,
Mm-hmm.
and trust me, this app that is there, it gives, like, I would say, 100% uh, accurate figures. It goes from how calculations would show you how much you qualify for.
Mm-hmm. So I really like that pre-qualification tool, right?
Absolutely.
And the pre-qualification certificate. So
Yes.
if somebody is watching, if they're your first time home buyer, okay, download the app, right, and go into the pre-qualification tool, right. So go into the pre-qualification tool and fill in all your information. See, it's very important to accurately fill in the information like income, debt, everything. So make sure you accurately fill out the information, and it spits out actually a certificate of pre-qualification, which is very cool, right? So if somebody is watching and is going to download the app and get the pre-qualification certificate, right, and you reach out to me, I'll give you $50 gift card.
That's fantastic. 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 So
Right.
people, viewers, take advantage of this. That's $50 free money given out to you for
Exactly.
something that you would love to know. Because see,
Exactly.
when a person is looking into buying a home,
Yeah.
the first thing you want to know is how much you qualify,
Exactly. Exactly.
right? And by with this app, I'm telling you, with this app, it is right at your fingertips. You just do click, 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 and you would come to know how much you qualify for. Like, it's right there. And about this app, I would say about one thing: the pre-qualifying tool is absolutely there.
Yeah.
Apart from that, there is another app. The first thing it says, simple mortgage calculator,
Mm-hmm.
right? In that calculator, one would know, like, even for existing people, homeowners who have existing mortgage, like, how many times do we have to go to our financial institution to
Mm-hmm.
ask that person, hey, I'm paying $2,000 of my mortgage payment.
Yeah.
How much of my payment is going towards my interest, and how
Mm-hmm.
much of my payment is going towards my principal?
Yeah.
What app will tell you right there? Simple mortgage calculator. You just plug in your figures, and right away it will tell you how much portion of the $2,000 is going into your principal, how much is going into your interest. And I
Mm-hmm.
think that's fabulous. You would want to know how much equity are you building from that payment, each payment you're doing, right?
Exactly.
One
Exactly.
more thing about this is over here, if you see, it has what is called a land transfer tax.
Mm-hmm.
And I think it's very, very important. Like, people want to buy homes and they want to calculate their closing cost.
Yeah.
One important thing about closing cost is the land transfer tax.
Mm-hmm.
And of course, if you're a first time home buyer, that calculator even has that option there, where you could say you're a first time home buyer, and it would
Yeah.
calculate exactly what land transfer tax you would owe, or you would have to pay when you're buying a home. And I
Mm-hmm.
think this is fantastic tool. Viewers out there who are looking, please feel free to reach out to me, or even Waze,
Mm-hmm.
asking for the link for this app download. I wish I could have, just go out on Google and you could do this. Probably I don't think it's available because it's an app, so you would
Mm-hmm.
have to have that link. Please
Yeah.
reach out to Waze or me. If
Yeah.
somebody reached out to me to download this app, and as I said, to qualify, there's a $50 gift card given by Waze. So take
Mm-hmm.
advantage of, not only for Waze. If somebody comes to me also,
Yeah.
I'm also going to give them a $50. Absolutely.
Awesome.
Why
There you
not?
go. Double it. There you go. So I also noticed there is a non-resident speculation tax as well. So you can, if you're a non-resident, you're purchasing, you want to know how much tax is going to be, on your purchase. There is an
Right,
option for that too. That's
right,
amazing, amazing, John.
right. Now, since you brought up this app, I think this is a presentation by itself, ways. I think
Yeah,
we
we
could go
can.
on for our next presentation,
Yeah,
talking about
definitely.
more on this app, where our viewers would already have it
Yeah,
in their control,
we
and
can
actually we
walk
can
them
talk
through,
about
walk
that,
them through that.
walk them
Mhm.
through that. Absolutely, yes, yes, we could do that.
Absolutely, absolutely. Anything else you would like to add for today's session, John?
One more thing, definitely, I would highlight in today's conversation is depend like what we see the realistic in today's market as we see the house value is on top of the brim,
Yeah,
right? Even as a realtor, you would attest to that, right?
yeah.
The price of house it's just it's really at the high peak, right? Compared to even last couple of years what we saw, and this pandemic, or even the current situation what we see, and people are wondering like what's happening with the real estate market, right? The house value is up to the top, like we never seen this ever since even I came to Canada. I've never ever seen something like this.
Yeah.
So again, with this note, I would tell my viewers or our viewers, please, please, please take advantage of this. The biggest advantage that you could take is refinance,
Hmm.
right? If you have built up that equity, refinance, use that equity to even grow it 3 or 4 times.
Hmm.
And how you could do it? Reach out to Waste, reach out to me. Let's help you out, right?
Excellent, excellent. So on that note, I would definitely recommend all my viewers to reach out to John. Set up a 30-minute, no obligation consultation, right? With try to understand, okay, if you are a new home buyer, what is that you're going to pre-qualify for, right? And how John can help you, right? John has got probably over like, well, how many lenders you're working with, John?
Oh, well, we have a lot. We have probably close to almost 60 to 70 lenders in our books,
70 lenders.
and probably
Okay.
even more than that. I have to go
Yeah.
into details, but out of them,
Yeah.
I have some favorites that I deal with, right? So
Mhm.
probably I have 15 to 20 or even more, and it keeps on increasing.
Yeah.
The favorabilities that I have within my books that
Yeah.
I deal with. It all depends on the client situation,
Right.
which client I would want to fit to get the best deal, to get the best rates for my client. So, and
Excellent.
that's an unending story.
Right.
Depending on how many lenders we deal with,
Right.
it's not only one particular lender, and it's not that if we are done with that and I'm done and I say no to my client. So
Hmm.
we have numerous lenders that we deal with, and it keeps on adding in our books into my favorite list, at least, right?
Hmm.
I have my favorite that I deal with, and why not? Everybody has their favorites, right?
Yeah.
It depends on the relationship we build up with the lenders, so that we could give the best deal, the best fit for the client.
Yeah. That's perfect. So yeah. So reach out to John if you are a first-time home buyer. If you're an investor, you want to tap into the equity. Reach out to John for refinance. And also, if you just want to know what your penalty is going to be, reach out to him as well. And thank you, John, for taking the time this morning to discuss all these important points and discuss about rates, discuss about your knowledge about mortgages. So thanks again, and we will definitely have another session for everybody with the app, and I will be sharing the link on Facebook and YouTube as well as LinkedIn of the app. So please download and give us your feedback on the app. And like we did mention, if you download and you are ready to purchase a home, you want to pre-qualify, you send me the pre-qualification certificate saying that, hey, Wise, no, this is what I'm pre-qualifying for, and I'm looking for buying a home. And then I will give you a $50 gift card. And John has also extended that, for you as well. So if you download the app and send a message to John, and he will arrange for that $50 as well. So thank you everybody for joining. And John, any last comments for our viewers?
Well, the only comment that I would say is wish you all viewers happy selling or happy buying.
Yeah,
At the end of the day, we are here as professionals to do what is best for our clients. Every
definitely.
client is different,
Yeah.
but at the end of the day, our goal is to do what is best and what is right for each and every client.
Absolutely. On that note, I would end this, wonderful conversation. Although I want to keep going, but I think that's for another day. And thanks again, John, and thanks for the viewers to watching. And keep watching, keep following us on Facebook, LinkedIn, YouTube, Instagram. Reach out to us. We're glad to have a conversation. We love real estate. We just want to help you out with your situation. So definitely reach out to us. And thanks for watching.
Thank you very much. Thanks, you guys, and thanks for all the viewers. Have an excellent day.